The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Good morning, everyone. Looking good, Billy Ray. Feeling good, Lewis. Well, we're going to start out the show like we usually do, which is the DAX index. We start with the 15-minute chart. As you can see, we have some nice short-term patterns that have lined up. But as we look at something a little bit longer, what we want to do is to look at the daily chart, which is the last one that I posted, and I think it's something, well, I've posted it into the room. I do not know they're coming into the room. I don't know why they're not being posted. I see them posting into the room. Another technical challenge, as we say in the trade. But anyway, that's the way I do it every day. Nothing is different. 10-4. Now we've got it. We're back in business. Houston, we don't have a problem anymore. All right, now lastly, what we want to do is to take a look at the, as you can see, this daily one is still in a downtrend, but if we take a look at it on a weekly basis, you're going to be able to see that this is a, been a very strong market, since 2014, but we did make the perfect ABCD pattern in this DAX up at that 13,000 level. We're trading around 12,500 right now. So that's what we're keeping an eye on here in the DAX. Intraday, it is an extremely good intraday trading vehicle, far better than the S&P 500 because it has larger swings, and it really makes it, really quite nice. I had a question yesterday about the Bitcoin chart that I posted, which is, basically a really big long-term Gartley. The only reason, folks, that I put that chart in here is because someone requested it. I have absolutely zero interest in it. It's traded off exchange, so I don't really, I follow it just because of the price and for historical purposes, because I frankly believe that it is a tulip bulb type event, but who knows. Anyway, the reason why I posted it yesterday was because Jamie Dimon was so excited about it being a tulip bulb mania type thing. But as you can see from this chart, it stops exactly spot on the Gartley pattern and also the ABCD, and so it was as long as it holds that 3,400 level in Bitcoin, that should be it. Below 3,400 changes the whole game plan, and that means you're getting ready most probably heading down to a much lower level. Now I've got a couple of, the fact that we have Norm Winsky on today is going to be great because you've got some really good timing stuff. Remember that we have the autumn equinox coming this week. We have Rosh Hashanah, which is an 8-day lunar cycle out of the Hebrew Bible, and that's going to be interesting, some cycles there, folks. The market just keeps defying all gravity. We've broken every single record statistically in the Dow Jones that I think we can see as far as the number of days in a run and stuff like that. No, we have not. 1997, I believe, had a longer run. Let's take a look here at something from University of Michigan Consumer confidence numbers. You'll see that the number of people looking for higher stock prices has reached an all-time record, surpassing even the high of 2007 and also 2000. So there are a lot of bulls out there, and they have been right. So the question someone's asking me is about the wheat market. I think wheat is still trying to make some type of a bottom down here, and I just don't see anything yet to take a look at. We've had a pretty good run here in beans. Corn has done nothing, but wheat is hanging in there pretty good. The problem with the wheat is, folks, we've lost the crop basically in Minneapolis wheat, yet the prices are going down on the commodity exchange. That's not a good sign, because that tells you demand is lower because prices are much higher. So let's watch that later. That's basically commodity, and most of you folks have zero interest in commodities, so I don't think it's going to be that important. We do have something that's very interesting today, folks. I wanted to show you a chart that looks extremely bullish to me. Hold on one second, please. And that is the crude oil chart. I'll put this up here. You'll see here, this is the crude oil over the past couple of weeks. You'll notice back on September the 11th, we made a perfect 61% retracement of the low from September 30th. We then went up and proceeded to hit a couple of ratios on the upside. But the important thing is last night, yesterday, we made a perfect ABCD that stopped at the 382 level, and we promptly rallied over $1 a barrel. And we've gone up to that $50 level one more time. Now, we have oil statistics coming in today, which is always difficult to trade. It's almost like trading in front of an FOMC meeting, which we also have today. So this looks like it's ready to break out to the upside in crude oil. It certainly has every indication of doing that. As long as it holds that 49 level, it should be, should be pretty good. It's being helped by this next chart, which is the heating oil. If we take a look at the heating oil, you'll notice here that we have a price objective with an ABCD structure coming in at the 1.618 expansion level, about 10 cents higher in heating oil. So this is what it looks like in the crude oil and the heating oil coming into these statistics that are here for today. Now, one thing that we've been watching for quite some time here is the bond market. And folks, we are at the proverbial moment of truth here in the bonds. We talked about this a little bit on the air yesterday, talking about this 154 level. As you can see, this is a daily chart, goes back to May. You'll notice a 3 drive to a top pattern that was, an ABCD structure, double ABCD structure. And now we pull down to a 61% retracement of the low from June 24th. Let's try that again, July the 5th. And so as long as we can stay above that 54 level, this has a bullish bias because you have higher bottoms and higher tops. So this is going to be a key today. And with the FOMC in there, it's going to get wild. Notice just below the 154.10 level, you see the 78% level, which comes in at this 153.05 level. It's not unusual to see spikes during FOMC meetings, especially the things that they're talking about. But if you will take a look at that, you'll see that 153.04 level should be pretty much spot on. Is what I would be watching. So this is real critical today in the bonds, and we're down 8 days, so they are ready to rally. They really are. And the $64 question is, will the market go along to see? We have a question from one of our folks up in Canada about the platinum. The platinum, we have to wait. It is hard to trade, but we'll get back to platinum, and I'll post it after the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I posted the chart for platinum, and as you can see, we had a really distinctive top form here a few weeks ago when we were looking at gold around the 1365 level. And now we're pulling back to a 61% retracement here in platinum, which lines up pretty much what we're looking at with gold. And we'll bring this gold chart up that we looked at yesterday. I haven't updated it yet because I had a little bit of a problem with some technical stuff this morning, getting the computer up and running. But if you'll notice here in the gold, we're looking at some really strong support coming in here at around the 1294, 1299 level. And with the FOMC in today, it's probably going to get pretty wild. Watch that level, folks, of 1298 in the gold. That's a 382 retracement. It also marks the old highs that we made back in June and August, and also in June and August, and then also we touched that again, back in September, so late August. And if we take that out by just a little bit, and the reason why it's so important, folks, is because it's a perfect 382 retracement of the low going way back into July. So, and there's lots of ABCD structures forming to get it right into that area. So that's why it looks, so very interesting on a technical basis. It's a real beauty when you look at those because it really lines it up, very, very nicely. However, silver is sitting spot on. We'll bring this up to let you folks take a look at it here. If you'll look here at the silver, you'll notice that it is setting right now, setting on a 20-minute line going back to last June. The problem is it's right at a 78% level, right around 1710. That's going to be a very important support point, and if it fails that, you'll probably be looking something around the 1630 level. Again, this is FOMC day today, and the metals respond, dramatically to the action that goes on in the currency markets. That's where it all starts. And so I'd be very, very careful going into it during the time. Wait till they're done doing their talking, and then the market will give you an idea of where it wants to go, because these notes that they have after these things can be quite vicious. And believe me, if you think that Federal Reserve is not trading these things, you are sadly mistaken, because that's the ultimate of insider information, yet no one says hardly anything about it. We're going to take a quick look here at the weekly chart of the British pound, because it's hit the exact number up here at that 130, right about that 136 level. We're trading at 135 and change right now. That's ready to move lower. But again, this has been very, very interesting. You're correct. Shane Smolian has been spot on about this stuff, and we hope to have him back on. He's up and running as of last night. He made it through the storm. He had moved his family to Tennessee. And so they're back and finally have electricity going in Miami. So that's a very good thing. We want to take a quick look here at the Japanese yen, because this is the one that I think is, I'm going to do it two ways. Hold on. Let's just do it the longer term way, which is the daily chart. We'll put it up here. And then what we're going to do is we're going to go down and look at it on a intraday basis, and that'll be you'll be able to see the pattern that I'm trying to show you. But first, I've got to get this one. Oh dear, I've lost a chart. Don't tell me that. Shut the front door and raise the rent. There's the crude oil. There's the euro. Well, can't find the darn yen chart. Well, let's move on to the Japanese yen, because that's the one I can't find. Let's go on and take a look at the euro, because we've had a pretty good run here in the euro. And what I'm looking at here is an hourly chart going over the last several couple of weeks. And what we'll look at here is, you'll notice, hold on, we'll get this up here. Wow, these market. I hope this posts. This is the Japanese yen. It looks like we're forming a head and shoulders pattern. You'll notice that there's some resistance up there at the right shoulder, which is at 120.25, and that would set up a really nice pattern. Folks, the fact that the Fed is in the market, they've always been this way, but lately, going back to the time of Alan Greenspan, they've gotten more. That's what it is, the euro, correct. I cannot find the Japanese yen chart. I did it, and I posted it to myself, and the problem is I can't find it in the post. And therein lies the problem. So I don't know where it is. So I'm not going to worry about it right now, because I can't get it up and running in time. So we want to watch that for the next session. But then we've only got a couple minutes, because then we have Norm Winsky on. We certainly want to listen to his timing stuff, which is extremely, extremely good. So anyway, I put that euro up chart to take a look at it. Let's just get the Japanese yen chart on a longer term basis, because you're going to see something that should be able to explain it easy enough. And that is, if you look at this chart where I have this ABCD structure up here at this 111, last night, folks, this thing hit the exact 61% retracement at 111.65, I believe. The actual number was 111.70. It's backed off 50 pips from that level. So that's telling you that if this is going down, that 111.65 to 112 level is going to be very interesting resistance. Now, again, with the FOMC in there today, that poses a little bit of a problem. But what you've got to be able to do is to match that, with the pattern, because if it doesn't get above that, that's going to be a very good information of looking at, seeing about, what's going on about these things. So anyway, the questions that you're asking about, what's going on with China and the UN and all this other stuff, folks, that's several levels beyond my pay grade. So I just look at the charts and try to determine, where I think the things are supposed to hold. The most important one today, from my perspective, is this bond, this December bonds at the 54 level. That's a major 61% retracement on the daily charts. It's also a 1.27 expansion, and that'll be something to watch. We'll recover it tomorrow, of course, but this is what we're looking at today. Also, the gold at 1298 looks like a very, I'm going to buy gold at 1298 and risk $6 on it. That looks like something that could be very interesting. And you know, some of these things, if you buy them and put a stop in, you'll be out by the time you get your fill on the long side. You'll probably get your fill on the short side, but you've got to put a stop in somewhere because you don't know where they're going to hold. That's the $64 question. We have one question about the Bradley model. Folks, the Bradley model does a pretty good job, and the emphasis here is on the two words, pretty good. It is far from perfect. And there's a few times that it's perfect, but, you know, that's a rare occurrence, but it does usually do a pretty good job. And as I mentioned yesterday, my opinion is that since we didn't stop when we were supposed to stop, which was last week, it was all set up to go down on September the 11th, and it didn't do that. So what you have to do is to assume that it's going to go up into the next one, which is, hold on one second, please. Wow, this computer is just not working good. There we go. Comes into October the 5th. So, and that is an anniversary date of the big high before the crash. Okay, folks, stay tuned, and we're going to have Norm Winsky from Astro Trend as our guest. So we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our friend Norm Winsky from Astro Trends back in the business, I guess, from Hurricane Irma. I guess you're alive and well, my friend?
Yes, sir, Larry.
Okay, fire away, buddy. You got the mic.
Okay, you got my notes up here on the screen. Hopefully
Yes, sir.
Everybody can see those okay. And
Yep.
I'm just going to preface that by saying that the way to, in my methodology, the way to get the best batting average, in other words, the highest percentage of winning trades, is to look for an extreme in the markets. You don't want a market that's in the middle of its range, preferably at the top or bottom of its trading range, and then at a key date. So you get the intersection of time and a good setup for price. Okay, so here I put up here on the screen the top things of the month coming up here in the next few days. So tonight we have Jupiter aligning. I use the what's called a natal chart. Take a snapshot of the planets take a snapshot of the planets at a key date for the beginning of something, and this is for the U.S. called a natal chart. Back on July the 4th, 1776, Jupiter is aligning with where the moon was on that day, the U.S. moon. And so that indicates U.S. stocks, T-bonds, and U.S. dollar. Okay, and then we have another big thing, and then we have something else. Oh, we have a new moon coming up tomorrow night. Let's see, today's the 19th. Yeah, tomorrow morning, early tomorrow morning at 1:30 in the morning, overnight. And we have a new moon in Virgo. And the moons have been very powerful the last several months. And that's been affecting the financials and your precious metals and the grains, and because it's in Virgo, especially soybeans. Okay.
Norm, we have a question from one of our listeners about the Hebrew cycle. You know, buying Rosh Hashanah, selling Yom Kippur. Do you know anything about that, or?
I know a little bit about that, and I researched it in the past. And sometimes it works one way, and sometimes another way. I don't know what you found. I know you were talking about that on Monday's show. And sometimes if you're making a low on Rosh Hashanah, you'll make a high on Yom Kippur. Here's the thing. Speaking of the moon, that was a very timely question, and that the Hebrew calendar is a lunar calendar, and that's why it might work. The Rosh Hashanah coincides with the new moon. Rosh Hashanah will begin Wednesday evening, just after the new moon. And the ancients, when they determined when the holiday would begin, looked for the first sliver following the moon, following the new moon, and that's when they would begin the holiday.
Mm-hmm. So it starts Wednesday at sundown, basically.
That's correct.
Okay. Go ahead. Sorry for interrupting. That was a question someone asked.
No, that was okay. So anyway, and then coming up in a few days, let's see, I mentioned that back here on the earlier one with the U.S. moon, that emphasizes that's very important for the U.S. dollar. Then coming up here in a couple of days, we have something indicating this is a very negative cycle. I don't know what's going to happen. Maybe we already saw the influence with these things are long-term cycles. They have a orb of influence. In other words, the range of when they start influencing things, sometimes days and weeks in advance. You might have heard, we had two big hurricanes, unprecedented, having two major hurricanes like that so close together, hit in the U.S. And that might have been it, but the culmination of the cycle is due Thursday night. Then we have Mars changing sign. It's going to go into the sign of Virgo, and so we'll get a change in, if this is heliocentric from the point of view of the sun, get a change in emphasis from the point of view of Mars for the different markets. So we're going to switch from out of Leo and into Virgo, which is soybeans and the grains in general. Okay, now I'm going to move ahead here now and show you some charts and some markets, and we're going to talk about, I know nobody wants to hear about the stock market, but I thought I'd throw that in anyway.
That's a good one, Norm.
Thank you. They're waiting to hear about oats, right? They want to hear about oats or lumber, right?
Yeah, there you go.
All right. Anyway, so our remember the broiled, what was it? Ice chickens. Remember ice chickens, right? There you go. broiler, chicken broilers, whatever. All right, here's your stock market. Here's my key dates for the stock market. I got the 19th. This is totally independent. This is Gann math, totally independent of the moon. So that's today. The 19th is today. It could be it could be tonight, could be tomorrow, as long as it's within one day and it's accurate. It counts. I think you'll like this, Larry, because it's off of a major historical turning point back in the past. So this is 125 squared. That's 125 times 125 days. That's 15,625 days from the December 9th, 1974 major Dow Jones Industrial low. Okay, it's today. And we got another one coming up on October 1. What's that again, Larry?
That was the crash of the October crash of 1974. That's when I started to learn about trading.
Yep, that weekend of the 9th was a Monday. December 9th was a Monday. That previous Friday, 3 days before that, is when I went to Chicago to take my member exam. I was on the floor there on the, with everybody, my friends. I was in college when I went back to school. Oh, Norm, what are you going to do when you get out of school? Oh, I'm thinking of getting involved in the stock market. You can imagine the looks I got from that, right? They thought I was crazy. The stock market was considered toxic. That's something you want to run away from, back then, right?
Yeah, absolutely.
All right, then we got some Fibonacci dates coming up here. The 25th, that'll be next Monday, and the 27th. And notice they have an astro date. Well, that reflects the new moon tonight on the 20th, and so forth. So there's your 10-minute S&P chart, and going up. And you can see we're getting near the top of this channel. Okay. I have a technical projection of possibly 2514 area. That's where that line is right there. If we get a strong update today, it doesn't have to be real strong, but a moderately strong day today, we will start hitting these resistance levels. And that could be the new moon could trigger at a minimum some kind of short-term turn. In the past several months, Larry.
Norm, one of our listeners remembers back in May the 19th of 2015, we had a new moon, and we had I think Mercury was going retrograde at that time, and you called for a big top in the market. Is this the same type of scenario that we're looking at?
Well, this is not as powerful as a combo. That was, you had two phenomena landing within 24 hours of each other. You had the new moon and Mercury turning retrograde. But this is a new moon, and as I started to say the last several months, the full moon, new moon have been rather powerful, so much so that they have several times acted as what I call polarity points. Those are the culprits that that invert your Bradley model. The polarity points, have the power to invert the energy, the astrological energy. So then the model that says that we should be going up, 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 I had my big fork in the road for the 11th of September, whichever way the trend started going on the 11th is probably the trend for the rest of the month. However, if we turn here on the new moon, that could be a polarity point, and then that could flip the whole model. So we end up going down. I know we have a lot of confusion here, and I'm certainly sympathetic to that, Larry, I have my own Bradley model, which is not that too dissimilar from the results are not that too dissimilar for Bradley. So, I'm looking for, a big trend.
Norm, I have a question when we come back from the break about the difference between an astral date and the Fib date of September 25th. We'll take a break and we'll be right back with Norm Winsky of AstroTrend.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Norm Winski. Norm, we got a couple of questions from your presentation back on September the 6th. You were talking about some really strong things happening between, I believe, the 11th and the 25th. This is pretty much what has been happening. Do you still stick by this this forecast?
Well, with the qualification, what I just talked about is the new moon. The moons and new moon, full moon in the past several months have been flipping the energy. So if the energy indicates one trend until you get to a polarity point. So it's Newton's law. A body in motion tends to stay in motion until enacted upon by an external force. So we have to wait and see in the next day or so, is this thing going to turn big time or just a small, we've been up, about 6 days in a row now, I think, Larry? And so
I think 13 out of 14 in the Dow or something like that. It broke some kind of
in terms of consecutive higher closes, right?
Sure.
So we're obviously getting overdone here, and a classic lineup for me is when you get to a key time and you're extended, and then there's a good chance you're going to get a reversal, right?
Mm-hmm. Okay, what is the difference between an astral date and a Fib date?
Fibonacci, I do Fibonacci, Lucas time cycles. Okay, when people take my class, I teach them all about that. I give away all my secret formulas and the whole thing so they can do it themselves and fire me before they ever hire me.
Okay, go ahead. You still got the mic.
All right, there we go. I'm going to move ahead. We're just going to take a quick look here. Here's your S&P daily chart going back to about April, and you can see we're getting to the top, starting to approach the top of the channel here. Right. And I got about the 25.14 level there's another projection that goes up to about 25.30 area. And so right here, you're getting this little wedgie area here. Get up to the beginning here and possibly up to there. In the next day or two with the new moon, that could turn the market on at least on a short-term basis, possibly it could be a bigger deal, Mm-hmm. So here's your dollar. I'm looking for markets that are at an extreme. I was actually looking over the different markets last night. It was most of the markets, many of the markets are kind of in the middle of the range. They've already made a turn and kind of diddling around but the dollar is like the kind of the mirror image of the stock market, and then it's been going down, 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 is not too far from its lows. So what I would like to see, it doesn't mean it's going to happen, is if the dollar were to go back down here in the next day or so and retest the lows, then we have a potential for putting in a nice, some kind of nice low, Okay.
Okay.
So moving on ahead, here's the beans, because we're going to have a new moon in Virgo. I said, well, I better take a look at beans, but the beans aren't, I would have loved if we were over here and not over here, at a big low or a big top, but we're kind of in the middle, but we are at the top of this, kind of close to the top of this little short-term trading range here. So we pop up a little bit back to, looks like about 980 level, and then stop there in the next day or so. That could be a good short-term top, Obviously, if you pop over that, then it's, then it's good to go a lot higher. But that's kind of a sort of an inflection point there. If you can get the beans up just a little bit in the next day or so, and then roll over. Here's
Norm,
your
we
wheat.
have a question. Yeah, there's it. Wheat. Go ahead. That was the question. Fire away.
I'm like psychic,
Yes, you are.
I'm Tiger Dead psychic, Larry. All right. Anyway, so here's your wheat, and it's kind of doing the same thing as the beans. It kind of has popped up off the lows here, and it's kind of in this little trading range. So we need the wheat to do something decisive here. It's kind of in the middle of this little range. You need to get it to pop up toward the top of this range and make a top, or come back down and retest the lows. I think this looks like a possible candidate. If it came back down and retest the lows, you might be able to establish some kind of nice bottom there. That's a great downtrend there, and so that's why I put that in there, just to show you what a nice downtrend you had previously.
Okay.
Here's your key dates there for the wheat. I think I showed you the key dates there for the beans. You had yesterday, and then you have tonight, tomorrow, and the 20th is for both because of the new moon. Okay, so I couldn't find very many markets that were at some sort of extreme. So rather than taking up time, I thought I would allow a little more time for possibly questions right after I tell the folks how they can get some free stuff. So anyway, I'll just tell you a little bit for anybody who's new and doesn't know me. I've been doing this a long time. I started studying the stock market when I was 15. I'm 66 now. I continued studying all through college, and then I got inherited some money, and so then I started investing, and that led to my making enough money where an opportunity came along when I was still about a senior in college to buy a seat in late 74, early 75 on the new Chicago Board Options Exchange, and I paid.
Hey, Norm, we have a question. What did that seat cost you back in 1974?
I was just about to tell you, $25,000.
Wow, that was a lot of money in 1974.
Yep, well, I had it because I'd inherited some money, and then I increased my money. I was buying certain stocks. Like I made money in the copper mining stock, in a copper mining stock during the bear market of 73, 74. So I was kind of swimming against the trend there, but making money. I made some nice money and so forth. So I tell all those stories in my class,
Those seats are now $4 million, I believe, or close to it.
Well, they cashed out. They did the demutualization thing about 5-10 years ago now. And
somewhere between 5 and 10 years ago. Yeah.
If you hung on to your SIBO seat when they demutualized, I think it was worth about $3 million.
Wow, not bad for $25,000. That's a pretty good deal.
Well, I didn't hang on though.
Well, no one ever buys at the low and sells at the high, except that one or two persons that do that. But that's unusual. Norm,
go ahead.
Someone has a question about the crude oil market. What are you seeing? We have crude oil numbers today, and what's your feeling on crude oil? Because we've been at this $50.
I don't have a strong indication for crude oil right now. I just have the new moon is the best I can tell you. And so I didn't even, I think I took a real quick look at it, and that's about it, Anyway, okay. So I've been doing this a long time. I was on the floor, CBO floor, and also traded on the Board of Trade. The CBO was a child of the Board of Trade, and traded on the Board of Trade floor for a while, and did all that over a 12-year period. And then I've continued to, trade and track the markets. And I started this letter 39 years ago, Larry, on Halloween of '78. And,
wow.
Yep. And so, doing good. I just had a miracle. I thought my streak for 39 years of monthly letters without ever being late for a deadline might get broken by the hurricane. But somehow I managed to get back here and get back in hoping to get the October letter out on time. So speaking of that, the folks can get the October letter for free, and a free class that goes with that. It's individualized class running about 5 to 6 hours, 5-hour class, and it's basically a college education. My entire is kind of surveying everything I've learned in the last 40, 50 years, all jammed into about 5 hours. I'm going to teach you Astro, teach you advanced Fibonacci, how to do fractals. Those are amazing. And you get all that for free. And if you mention Larry, it's all free with a double your money back guarantee, right?
This is a good deal. Norm, we have a question about what Astro program do you use for your dates and stuff? Do you have a specific one? Or?
I use the Matrix WinStar 2.1.
Those are the guys up in Minnesota or someplace, isn't it? They used to be Blue Star.
They were in Michigan, and about a year, 2 years ago, they sold out to the folks in Astro. I forget it was Astro. There's Astro
Computing.
In Gainesville, Florida. They're in Gainesville, Florida.
Okay. Hey, listen, thanks for joining us, my friend, and we'll have you back on soon.
Back?
Okay? Yeah, you're coming back. Stay with us. Stay with us. We'll finish up. Norm Winsky, Astro Trend.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we're back, folks, with Norm Winsky from Astro Trend. We got an important question for you, and that is, what is your strategy here with the new moon coming in tomorrow? Are you going to be looking to short futures up in here? or are you going to be waiting until the 25th to the 28th of September? What is your?
We're always
what's
looking
your
for an
game plan?
opportunity, and we're looking for extremes. That's the key. You got to get the market in an extreme. If you're in the middle, it's like a mirror image. These things, these astro points, these key dates, act like kind of like mirrors. So, like remember in physics science class, you learned about the like how a motor works. You hits that electromagnetic point, and then the field flips, and it goes back the other way. So we need to get to an extreme because it's again Newton. For every action, there's an opposite equal reaction. If you're going sideways, or you're not going to get much of a reaction. You need to get you got to pull the rubber band tight so it can go back the other way.
Mm-hmm.
Okay. So the stock market rallies, like I said, I would like to see. Doesn't matter. It mean it's going to happen. I'd like to see the stock market rally today. Get up into some potential resistance levels, and then I think you have an opportunity potential for some sort of reversal.
But Norm, we have a question from someone. What do you usually risk when you? What instrument do you trade, and what do you usually risk? Do you do
I like
the
futures.
S&P?
My letter is based on futures, so I'm only
Which
talking
one?
about
NASDAQ or S&P or?
I like to go where the volume is and reflects the main portion of whatever market that is. For that, I think that's the S&P 500 E-mini is where the place to be. The NASDAQ tends to be somewhat of a maverick. Anyway, let me get my contact information
how much do you risk on that?
Get the free. I wouldn't. If you're just doing a short-term trade, I wouldn't risk more than a few $100. If you're looking for a bigger trade, maybe more. I'll get into that when they contact me. But here's how you can contact me. Believe it or not, I'm still in Naples, Florida, after the hurricane, and my telephone is 239-594-3939. There's my email, nwinsky at embarkmail.com. You can contact me on Skype at norm.winsky. Please contact me right away. I'm going to be away in about a day or so for about a day, so you can call me today. That'd be good. Or in a couple of days, I'll be around, and then we'll get you set up. Probably be doing something for early October because it's getting late in September for you to get the maximum value for your free class,
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.